Investors and traders, welcome to the channel. Today is 10th of October 2024. Hope everyone is having a great day. We will be taking a look at the key US markets for this video segment. It's going to be a short update. We had some key economic data come out today, so let's see what the price action was in the marketplace. As always, this video is for educational purposes only and it's not a financial advice. Let's have a really quick look at the forexfactory.com calendar. What did we have come in today? Now I'm based in the United Kingdom, so the times that you see here, these are British summer time. So you'll have to adjust these according to your own time zone. So 8:30 is the Eastern time zone. I believe it's 7:30 in the morning for the Central time zone in the United States. So core CPI month on month slightly higher, 0.3%. CPI month on month was 0.2%, and the CPI on the year on year 2.4%. So very slight increase compared to the what was the forecast, it was 2.3%. And here is the real one. The unemployment claims, they have actually gone up. The expectation was 231,000 and it came actually 258,000, so higher than what is expected. So let's see what it transpired in terms of the price action. So this is the US dollar daily chart of it, and here you can see a very strong rally that has been taking place over the course of a week and a half in the US dollar, and this is what we had been discussing because it actually completed our pattern, which I'll show you on the weekly chart. And ever since that, we were watching for a rally, and we had a few attempts. So we had an attempt here, then an attempt here, but they were all capped by about 38.2% of these swing highs around here. And then it went into this gap formation, and we have had a pretty strong move. And we were expecting this move to get to about 38.2%, and this is what it has done today. It went right to the 102.62, which is the 38.2% retracement of the 107 top, which came in around here. So the real question is that what happens from here. So we'll be watching this 38.2% retracement really carefully, but there is a chance that this market would actually go a little bit higher right towards this swing high of 8th of August 2024 and try to make an attempt to take it out. But in my opinion, I think we are likely to actually fail around here. This will also be around a 50% mark of it, but a pretty strong looking rally might actually be a short covering rally coming from the bottom of the range. So we'll have to wait and see. But this will actually put it in the middle of it, so kind of a fair value in terms of the marketplace, in my opinion, because it's just gonna be a 50% retracement. So there you go. And right here, let's just keep on observing this 30.2% retracement. A good chance we might see actually our start of a chance of a start off a pullback from here with a 30% chance. Maybe it's got a little bit of move higher because we have got some key data points coming out tomorrow as well, Friday. So on Friday we have the core PPI and then the PPI as well. So these are some market movers as well. So there is a bit of a chance, but the interesting thing to see is we have a market right at 30.2% retracement where it just went in a trading range. Now if we just move up to the weekly chart, here we go. So this is the gap I was talking about in this shaded region, and here the market has gone right to where the 20-week moving average is. So there's also some resistance coming from the moving average as well, but as I mentioned on the daily chart, there is a chance that this market could hit about 103.30 level. That possibility does exist. On the weekly chart, we have been stressing this for a long time. The key is really this 99 level, 99.98. Getting below this, the US dollar is going to be pretty weak actually, and it could actually accelerate down towards this region of 91, 92, or rather quickly. So just hang in there. Let's watch what the price action looks like for the US dollar. On the flip side, let's take a look at the Euro USD, what it has been doing, and you can see that pretty strong moves in the US dollar over the course of a week and a half, and the Euro USD has been much weaker, but now it has retraced about 50% of its move going back all the way to 15th of April 2024 to this double top formation with the recent top coming on 25th of September 2024. You know what it is likely to do is that this is the market symmetry. This was the biggest retracement that we had seen before, and this move has actually moved a little bit beyond that, which shows that it's a pretty serious kind of correction that took place. So right now it is getting into this region, with especially watching really carefully the 108.80 level, which is going to be the 1.618 expansion of this move, this swing low to this swing high, and this is where most likely we are going to find some pretty good support for this market to come in. And on the flip side, we've already taken a look at the dollar index, so that's going to be 103.30 level roughly. Now British pound has actually had also a pretty good correction right here. This level that we see around 134.25 to 134.50, it's a very strong resistance level, because we have a number of patterns coming together around here. So first of all, for this swing high, which is the 13th of July 2023, to the lows which came in 4th of October 2023, is the 1.272 expansion, and then we have an extended ABCD, which is CD leg is 1.272 of the AB leg, which is this swing projected from here, and then we also have this ABCD from the swing low of 22nd of April of the highs of 17th of July, projected from the bottom of 6th of August lows. So we have got a confluence, a number of things coming together around here, which means that this one spot 34.15 to 34.50 level is really strong resistance level. However, this market has actually fallen quite a bit, so it is actually oversold in my opinion. And also, you know, if you look at, this is the biggest correction that took place, it has actually exceeded a little bit, but it's getting into that really key region where we have a pretty good support coming in, and that's the 38.2% retracement of this swing low of 22nd of April. That comes in around 129.95 to be precise, but around 130 even level is actually pretty good support, also coming in from the structure, which is the double bottom possibly of the 11th of September 2024. So let's keep on watching this. I think the British pound is providing a slightly better pattern opportunity if somebody wants to take a stab on the long side with a defined risk. And how you're gonna define risk is really up to you. But if in terms of fixed pips, anything more than 65 pips perhaps is gonna be enough, around 65, and then you have to adjust your contract size, or trade smaller if you have a smaller account. But again, it's not a financial advice. You have to do what you have to do yourself. Okay, now let's take a look at how the gold market has been doing, right? Oh yeah, let's actually take a look at the USD JPY. It's a really important one. Second largest currency pair, traded after the euro. And yeah, there you go. If you remember, we had identified this pattern, and from here it's just been going up, boom boom boom. It has broken above the symmetry, but what it has also done is, I see an ABCD here. Let me actually try to draw it for you using this tool, and there we go, there we go. So right here we have this ABCD. Let me draw it for you, and this means that there is a potential for a reversal to happen. And then what we have seen actually on Thursday candle is that it's a negative close. So if it begins to close below particularly the candle of last Tuesday, 8th of October, then there is a good chance that we might have seen a double top formation coming in from the 16th of August 2024 highs, and that the market actually might be moving back into the trading range. So I think it's presenting some good opportunities with a defined risk towards the towards the short side. To join this trend, which started from the 12th of July, 11th of July 2024. So we'll have to wait and see, but this is the kind of thing that I look at, which means that there is possibly a further weakness coming into the US dollar. Now let's take a look at how the treasuries did. So let's take a look at the shorter end of the curve. This is the 2-year treasury note. And here we go, it has also gone right to the 38.2% level, around 4.10. This is what we were discussing, and here is it just completed this big ABCD pattern, which we were looking for the yields to go down to 3.9%, and in fact the yields went lower than 3.9%. So after completing this pattern, it went and found support from the structure, and this 38.2% retracement of this entire move from the highs of 29th of April is just perfectly normal. So here, let's just keep on watching the shorter end of the curve. The chances are we might see a bit of more of a trading range behavior on Friday, and as it begins to take out the lows of or go below 3.9%, that's where we can see a resumption of the move to the downside. But already it is making its moves by having a sell-off like this, where the market was pretty high and then found also resistance from the structure on the left hand side, quite similar to what the Japanese yen is doing right now. So some of these actually the 10-year treasuries yields, they kind of correlate with the Japanese yen quite a bit actually. And here you go, this is the yield of 10-year, and you can see that this is not a negative candle close. It means that the longer end of the curve, in terms of the yields, it is actually steepening up because the yields are actually higher. And if we were to look at it on the 10-year treasury note in the futures term, slightly different picture, because what we can see is actually in the futures, the market, look, this market, I thought we might have hit a pretty good bottom around here when it went sideways. It was hitting about 38.2% of these lows here, but it did not stop, and especially after it took the lows of this trend line. Boom! Now right now it went a little lower than the 50% of this entire low from here, 25th of April, and here after so many negative candles, we have seen a positive candle. So that's a good sign, which means that this market is getting ready to move higher. So we want to see some further confirmation. So if we see a candle, another positive candle, ideally if it is able to take the highs of 9th of October out to the upside, that's going to be a pretty good move. Then I would expect at least a move towards this trend line around 114, and that's going to be my idea that this market could get up to. And if we were to take a look at retracement, shorter term 113 followed by around 114. Now the long bond futures, this is the 30-year bond futures chart. This market has actually been also under stress. I thought we were putting in a pretty good ABCD pattern here. So we have this purple line ABCD, but the CD actually extended, and it has just like the treasury market, a 10-year treasury note, it has on the futures chart completed the 50% retracement of this entire move here. So the market is pretty balanced because it's 50% retracement in terms of the fair value. And if we were to see what the CD looks like now in terms of the projection, so it stopped kind of between the 119.18 and 120.09, so right towards the 1.618 extension of the CD leg is 1.618 times the AB leg, so it was a pretty strong move to the downside. But this market also, we have to wait for the further confirmation, but the 10-year treasury note actually closed higher on the futures, and this one needs to give us further clues. But it looks like it is also trying to put in some sort of a bottom, and after this some really sharp move lower, we could actually begin to see a beginning of the yield pressure abating. And tomorrow is PPI, so of course we are going to get some price action coming out of the treasuries tomorrow. Now let's have a quick look at how the stock indices are doing. Let's actually go around the world, and let's start with the German DAX. So let's take a look at our across the pond, the European indices, and how they have been doing. So here we go, the German DAX. We have seen a slight retracement Tuesday. Monday is actually on our timing model. We had the timing come in, and we saw actually the markets pull back a little bit also in the US, and then turn around Tuesday. And I still think this market actually wants to go higher and perhaps complete the 20,060 mark around here, complete this pattern. And I also see a ABCD formation right here, the smaller one here. Let me actually try drawing it. Here we go. So this wasn't available to us when this was done over the weekend. So there we go. So also getting into this region. So we're gonna have a completion of two ABCDs in that region, 1.618 expansion. So 20,000, 20,050 is gonna be a pretty strong resistance level in my opinion, and we could see some sort of a good pullback to start in the market from that level. And if we take a look at the FTSE 100, you can see that it's just a very range bound market, really boring and frustrating kind of price action if you are some sort of an intraday trader for you. So you have to trade a range bound market here. Now let's move to the US, and let's take a look at the S&P 500. S&P 500 cash index. We are looking at the daily chart, and it has right smacked into this target that we had drawn. I believe there is still further upside. It can get up to 58.14, 58.15. But what we saw today is basically an inside bar. It is a very narrow kind of trading range. But yesterday, Wednesday, was a pretty strong day for it. So it is creeping higher. I think it's going to move back into this box, possibly even tomorrow. But again, next Monday, 14th of October, we have a key timing coming in. So the market kind of, keeps on creeping higher and higher as we begin to move towards our key date of 7th of November 2024. But it's also, in my opinion, getting into a region where we don't have too much of upside. We do have these bigger targets, but I'm not sure whether they will achieve them, in November timeframe or in December timeframe. So we'll have to wait and see. Now let's take a look at the S&P 500 E-mini futures. On the futures, slightly different kind of a picture, but I think we could actually get into this box as well. And then let's take a look at the NASDAQ 100 futures. And NASDAQ is painting a different kind of a picture. It has been pretty strong this week, actually, especially during the turnaround Tuesday. So found a pretty good, really formed a really positive looking candle formation, and it has gone right into the 1.272 expansion one more time, and there is possible resistance from a double top around here. So it's gone, in my opinion, it's in our trading range behavior, but these moves are pretty fantastic, and especially if you're looking at them on an intraday basis, then there's pretty good opportunity. You just have to wait for the market to get a little bit oversold, and then the long sign actually prevails. So a lot of volatility on daily basis in this market, but the key thing is longer term. If you're watching it on a daily chart, it is not able to get above this this gray box here. whereas the S&P 500 is making new highs. So it's something to take a note of. And if we move to the Dow Jones Futures YM, and here we go, and what we see is this market appears to be also slowly but surely moving higher. We came pretty close to hitting our target of around 43,234, getting into this gray box, completing this purple ABCD. The chances are we might still be able to do that. So on 27th of September, we came as high as 43,005. So yeah, looks like the market, it is a range bound market, no doubt about it. But look at this really strong bar on Wednesday, 9th of October. So tomorrow PPI, maybe the PPI might be able to do what we're thinking, and it just goes and gets into this box. While we are at it, let's take a very quick look at the New York Stock Exchange Composite. This is something which you cannot trade anymore. There was a time where I believe this was tradable, I think on the knife market, but it's no longer the case. Quite similar price action to Dow Jones, and I think on the weekly chart we have some targets for it. So yep, it's I think moving slowly but surely towards 19,980. And then let's take a look at our index Russell 2000. Here we go. So Russell 2000 is much weaker. I think it needs to do a fair amount of work on Friday, which is tomorrow, to make it, to paint a slightly better picture, at least try to close in the positive territory on the weekly basis. And on the daily chart, what we can see is fantastic what it has done, because it has completed an ABCD pattern, and it has done it at the 50% mark. So we have a pattern formation like this. So this is something which I had actually shown in advance over the weekend. We have this ABCD here, and let me actually show you one more thing. There we go, and look, it just hit that level, ABCD, and also 50%, and it moved about 26 points higher. So that's pretty amazing. I think that's a pretty good support. The low of 10th of October, and the chances are we might actually do a move higher, moving into this box. I think this is the way it is also shaping up. Getting below 2180, it's I think the market turns bearish for this index. And here we go. This is the cash IWM, and here the cash had already done the ABCD, and it actually also closed above the 38.2% retracement. It's a little bit surprising for it to pull down right into it. But the good thing is that the futures, they had not completed their ABCD, and they also completed the ABCD. So if you look at it, this low which came in on the 3rd of October, which completed this ABCD, this close today did go below it, but it did not close below the low of 3rd of October. So on the closing basis, we are back into the trading range of this. So the pattern, in my opinion, is still valid, and I think the chances are we're getting into this gray box here, and probably right into 228 for the Russell at 2000. So this is what we are watching for the key US market. So we covered the US dollar, we covered the bond markets through the eyes of treasuries, and then we took a look at the key stock indices, also some of the European ones. Let's actually take a look at the gold market. So I did not cover this. Let's actually, oh wow, so gold, as you know that we had a big ABCD completing for gold at 2700, and then what we have seen is a pretty it's a pretty decent correction of about $80. But quite honestly, because of the completion of this big ABCD, let me actually go to the monthly chart. Here we go. So of course the month is not complete, but you can see that it's a trading range months thus far, and if there is gonna be a correction, I think we can pull back about $300, because this is what we had done back in August of 2020, and putting in a low which came around 2 years later, roughly 2 years later. and we might be able to repeat the same thing just because we are completing so many of these ABCDs. But now on the shorter term, look at the candle formation today, and we had a pretty strong close for the day, so that's good. So looks like the market wants to come back right into this trading range right here, and let's draw a retracement. um, this is the entire retracement, right? So the market quite easily get to about 26.52, and then it'll be back into this trading range. Let me actually go down to the 4-hour chart, or maybe even 2-hour chart, and here's something interesting that I have spotted here. So I think that we have done a ABCD like this. Okay, so it's a bit of an extended ABCD, but I would have really liked it to come down a little bit further. We missed it by about $4 right here. And in terms of the retracement, now it's going to be a little bit difficult, which this is the bottom of this trading range. So maybe we take this. Let's take this one actually, because it's an important low. And then let me remove these. Yep, it has done the 61.8% retracement of this. So it looks like we have the gold, which could actually move a little bit higher, maybe retrace right into this 50% on this move right here, and then we'll have to actually wait and see how the market will perform here. So let me actually also take a retracement from here. Yep, so that's the 60. Yeah, so the chances are, and actually let me also draw this right here, and we take this harmonics. Yep, so this is your level around COMEX Gold 2665, where most probably we're gonna see a pretty strong resistance coming in this market. So this is the one we need to watch. Getting above 2665, I think the chances increase that it might actually make a stab towards the highs one more time. So for tomorrow, we'll just really keep a keen eye on 2665 in COMEX Gold. So thank you very much for oh yes, one more thing, that one of the things that there is strength coming in the gold market is also because of the US dollar. So the US dollar is likely to weaken, and if we begin to see a kind of a correlation, which can happen, but it's a little bit rare, that let's say the dollar is also weakening and the gold is also actually declining, that's going to be a pretty interesting one to take a look at and work out. Because what we have seen, and especially we have seen it during the time of some sort of crisis starting, is dollar getting stronger and gold getting stronger as well. So we have had this kind of a correlation, and normally what one would think is that gold price in the US dollar, if the US dollar is actually moving lower, then the gold, that commodity, is likely to benefit from that. But if we begin to see the opposite of it, that both these commodities begin to move down, then we'll have to scratch our head why that might be taking place. But as always, we'll be following our patterns and doing technical analysis rather than figuring out why that might be happening, because this is what will matter from a trading perspective, to be able to define where to take your positions, etc., etc. So thank you very much for watching the video. Good luck, good trading. If you found our video of educational value, give it a thumbs up. I mean, if you like our channel because of the technical analysis we do, then please do subscribe to the channel, and if you do, then hit that bell icon button. That way you will know when the new videos are posted. Speak to you guys soon. Have a fantastic day, evening, night, wherever you are, and speak to you guys soon. Bye.